Hey, what's up you guys? Welcome to the Investing 365 YouTube channel. In today's episode, we're gonna be talking about the top 5 stocks that I'm watching right now. Maybe you should be watching too, especially when it comes to quarter 1 of 2021 and quarter 2 of 2021 as well. But overall, we're looking at the long term of things, and I think these companies are either undervalued or just have a lot of potential in the years to come. So without further ado, let's dive right into this one. So the very first company that I have on the list is a company called Rocket Companies. Now you probably haven't heard of them all that much unless you're familiar with Rocket Mortgage, because they actually happen to own Rocket Mortgage, Rocket Loans, Lendesk, and Quicken Loans as well. So as you can tell, they're pretty big in the mortgage industry, and in 2020 and even 2019, the mortgage industry has been booming. It's been absolutely incredible. The whole housing market has been on an uptrend ever since the recovery of the 2008 housing market crash, which recovered around 2010 or 2011, depending on who you ask. But here is why I'm investing into Rocket Company. And obviously, you now know that the mortgage industry has been booming, if you didn't know that already. One big factor is that Rocket Mortgage's PE ratio sits under 4, which is super awesome to see in such a booming industry, because a lot of people are investing in tech, but they don't realize that Rocket is one of those industry shaping companies that a lot of people are not paying attention to in the current moment. Not only do they have a nice PE ratio, but they actually have positive revenue. And by positive revenue, I don't just mean positive revenue in the sense that they're making money, but they're not netting anything. I also mean that they are actually net profit, and in 2019 have almost $1 billion in net profit overall, which makes them a very interesting fintech play, and in my opinion, extremely underlooked and undervalued, and in the market underappreciated. So my price target for them in the next 1 to 2 years is probably somewhere in the $40 to $100 range. So from $20 that they are now to $40, that would put them at 100% gains. And if we go all the way to $100, which I think they can do, especially if people actually catch on to the fact that they're a fintech play, the mortgage industry is doing really well right now, and they have a lot of room to grow. I could easily see them hit $100 per share in the coming year. Now, the next one on the list you probably have heard of if you subscribe to this channel. Don't forget to subscribe, because then you never miss content like this. Is a little known company called Lemonade Insurance. And I won't go into full depth here, but essentially they are disrupting the insurance space, and they're doing a great job at it. And at the time of them making this video, they're actually sitting at around $100 per share, and I could easily see them 10x in the next 1 to 2 years as other competitor insurance companies fail to innovate. Lemonade's strategic advantage is that they started with the innovation in hand, and now they're moving into the insurance industry with that innovation in mind. Now, they obviously have a lot of room to grow, but so far they've been doing a great job. And like I said, I'll link the company video down in the description below for you guys to watch after this video. But the next one on the list, you might have already heard of this company if you live on planet Earth, because this company is Tesla Maesla. Now, Tesla could be going through a correction fairly soon. Now, this has been literally the talk of the town for months and months, and the company has defied all odds and has just gone straight parabolic up and up. And the reason for this is that the long-term potential of Tesla overall, not just as an EV or a car company play, but also a tech and a battery company, they have so much potential in the sustainability of the Earth's energy future potential. Now, this sounds like a lot to chew, especially for Tesla, but honestly, as long as Elon Musk is alive, this project could become so huge. And the company has already grown from a tiny few billion-dollar company just a few years back to now over $500 billion in market cap. And even though I sold some of my position a few months back, I am still continuously bought in no matter what, because I see that Tesla has huge potential in the next 10, 20, 30 years of affecting almost every single industry that we can think of, especially when it comes to tech and energy. Next one on the list, you probably haven't heard of them, is Splunk Inc. And if you have, great, you're an absolute mastermind. Now, the reason why I'm paying attention to them is because in the short term, they had a quarterly earnings that fell by about 5%. So they missed their target by 5%. Now, it doesn't mean that they're losing money. No, they just didn't hit what analysts said that they were going to hit as far as markers go. As soon as this quarterly announcement was made, the stock price went down 25% plus, just like that, just overnight. I mean, the stock got completely obliterated, and on a good day for the market. And this technology company is actually doing really well. It's considered one of the best pandemic stocks next to Zoom, and Zoom has been doing extremely well. And just because they had one bad quarter, a lot of people are just dogging on them, and that caused their price to crash 25%. So I see that as a buying opportunity. If we're thinking about value investing, this is a perfect one for something like that. And I'm not the only one to think so. Kathy Woods at ARK Invest has been picking up Splunk Inc. for days and days and days now because they're at such a discount and they have plenty of room to grow in the coming months. A good price target for this company in the next, I want to say 6 to 12 months is probably around $250 to $300 per share, which is anywhere between 50% and 100% returns as I'm making this video right now. And the last but not least one on the list by any means is IAC. And again, you might have not heard of this company, but this company actually owns tons and tons of brands in over 100 different countries. And recently, they were the parent company of Match.com, Tinder, and a bunch of other dating stocks. And they actually had Match.com separate from IAC back in June. And because of this stock had plummeted over 63%, literally overnight. And in addition to that, it's obviously rallied since then because there was some money to be made after that deal went through. To this day, the stock is still down 38%. And if you look at their subsidiaries, they own a bunch of brands that have a lot of potential. One of them being Vimeo. And in fact, Vimeo is actually planning to go public in the coming months, which would be a huge deal for IAC in the short to medium term. Now, their current stock price, as I'm making this video, is around $180 per share, and I could easily see their stock climb back to the $300 range in a very short period of time, anywhere between 6 and 12 months. Now, again, this is not financial advice. This is just my personal analysis of these companies. Anything that I say in this video is for educational purposes only, but as you guys probably already know, I do like to do my own research, and I always advise you guys to do your own research as well. And if you haven't already, smash that like button. It really helps out the YouTube algorithm. And if you want to see more content like this, make sure you go ahead, subscribe, and also hit the notification bell and set that to all, because that way you get notified every single time I post a video, which is about 3 times a week. Feel free to check out the links down in the description below where you can get a free stock from Robinhood, $20 free from Stash, 2 or more stocks free from Webull, or $10 free from M1 Finance. Thank you all so much for watching. I'll see you guys in the next episode. Peace out.